Okay, guys. Hey, welcome again. This is Demetrius with Akeelah Traders. And so here in this video, I'm doing another short video on just an overview of um, the different strategies that we're trading. So you have a good, quick understanding of what the strategies are and what they're doing. So here on my chart here, I've just have the gold chart that's pulled up, and I've got all the indicators that the system is using. I have those loaded on here in visual mode. So you may or may not have these indicators on your screen, just depending on your system and stuff that's running. But these are the indicators that are operating here. So on here we have the Akeelah zones, and so the Akeelah zones is picking up supply and demand zones as the market moves along. So blue is demand zones, red is supply zones. So red zone says that price is most likely to sell from that area. Blue zones is price is most likely to buy from that area. Not always true, but that's what it is. So those are the zones that are on there. The other things that we have on here are moving averages. The moving averages are what we use for our trend strategies. So our trend one, trend two, and trend three are based on the moving averages. And so here, I think I'm looking at gold on the 15-minute time frame. So here, the moving averages strategy is basically saying when these moving averages, the system is looking for confirmation that among these three moving averages, that's the yellow, red, and the blue, that these moving averages are crossing upwards. If it is, and the system detects that, it's going to take a buy. It's going to execute a buy in that area. That's the trend one. The trend two is still using the moving averages, but is looking more to see if the the yellow and the red cross the teal area. And your colors may be different on here, so you're gonna may not see the exact same thing, but these moving averages here that we're using is the 8, the 20, the 50, and the 200. So let me kind of recap. Trend one is looking at the 8, the 20, and the 50. So when the 8 and the 20 EMA cross up above the 50, is going to take a buy. When they cross below the 50, is going to take a sell. And so right over in here, we would have taken a buy somewhere right in this area over here, and would have taken a sell over in this area. Trend two looks at the 8, the 20, and the 200 EMA. So when the 8 and the 20 cross over the 200, it'll take a buy. That's the second trend strategy. The third trend strategy is a little bit longer term one. It's only looking at the 50 and the 200. So on this particular one, on the screen right now, we don't see where the trend three would have been activated. We'd have to go back in some time to see when trend three back here, when my 50 is the dark blue. So when the dark blue crossed above the teal blue, that's when that trend strategy would have activated. So if we were trading back here from January 26th, our system would have picked up a buy. If we were running the trend three strategy, it would have picked up a buy sometime back here on January 26th. And based on how the market moved and whether we hit our TPs, we could have still been in that buy position, or it most likely would have traded it from this area up to somewhere in this area, and we would have taken profit. So that's the three trend strategies are based on the moving averages. And so you just have to be particular about what time frames you're using. The lower time frames are going to have more volatile moving averages, so you're going to be in and out a lot. The higher time frames is going to give you a smoother approach. Okay, so that's the three trend strategies. Then next, the two advanced strategies. One is the momentum strategy. The momentum strategy is predominantly using the TDI here. And so traders dynamic index, it has a lot of different variables that's in here. There's Bollinger Bands in here. There's RSIs that's in here. There's volume is being considered. There's a overall market baseline to kind of get an idea of where the market is. And so in this particular strategy, what the system is looking for is looking to see this middle line is the I would say the indicator, the market baseline. So if the market baseline is above the 50 level, it's above 50 percent level, then the system is only looking for buys. If the market base is below 50, it says the market is more bearish. It's only looking for sales. So that's the primary thing it's looking for. Secondly, once we are in a buy area, let's go back in time to here. Once we're in a buy market, so the main baseline is above 50, it's looking for buys, but it's waiting for confirmation. It goes down to these further lines, the green and the red. It's saying, hey, the green is the signal line. It's the RSI price line that's going to tell us where is the current price right now. And so when that RSI line moves above the red, and the red is going to tell me it's the trade signal. So when the RSI line moves above the red line, green crosses red up, it's going to execute a buy because it's going to say I'm in a buyer's market. The green cross red up, showing me that the RSI is above the signal, I'm going to take a buy. And it'll do the contrary to the sell. If we're in an area below the 50 in a seller's market and the green crosses red down, like right in this area here, if we were below 50, green cross red down, we would have taken a sell right in this area. And so that would have been somewhere in here, we would have executed a sell and would have hit, set for take profits 1, 2, and 3, etc. Okay. That's the momentum strategy. The last strategy that's in here, the advanced strategy, is the supply and demand. And so it's looking at these Akeelah zones. The executions that we're looking for here it's the main thing that is looking for is looking to see if and when some of these zones are created. And so let's say, go back in time here, we created a blue zone right in here. So we created a blue zone. That was a demand zone. It says, okay, I see a zone is created, but I'm looking also at this TDI to tell me if the market is in either an overbought situation or oversold situation to further substantiate this buy. And so our system is saying, even though you created a demand zone here, I want to see that the market is oversold, which means sellers have been pushing the market down. The sales are exhausted to the point where we should start to buy. Let me zoom up a little bit. Let's see if I can see what was happening at this time. Okay, so right in here, the RSI level here. Okay, so see, we were not in an oversold area here. So even though we created a demand zone here, our system would not have taken a buy. It would have continued to monitor to see if and when we created another demand zone. Let's see, the next time would have been over here. At this point, we created the demand zone here. And now down here, we're in oversold territory. The lower limit that we're looking for here is 35. So if a demand zone is created and the lower limit is below 35, which it looks like in this case it was, and our system would have said, okay, now I'm actively looking for a buy. That's the precursor to say I'm looking for a buy. Then it's going to wait to get another confirmation from the TDI. It's going to see, I want to see this green cross red up. So in this case here, it would have met all of our conditions. Demand zone created, the market was oversold, the RSI indicated that buyers are stepping into the market. We take a buy somewhere right up in this area here, and we put our stop loss below this demand zone. And that's how the system would have traded. Okay. All right. So that's just an overview. So you guys have a basic understanding of how the strategies work. There are a lot of other signals and things that the system is looking for, to kind of get further verifications. But that's kind of a top level view. So at least you have an idea of the strategies and what they're looking for. So you should be able to use that as a guideline to tell you whether you should be trading on the 5-minute chart or on the hourly chart or whatever. Again, knowing that the lower time frames, there's a lot more noise. So the chances of you buying off a demand zone on the 5-minute time frame, the likelihood of that being a successful trade is much smaller than it was if you were taking it on the hourly time frame or whatever. Okay. All right. So hopefully this helps. And again, drop us some questions if you guys have questions or comments on this. But hopefully it gives you an overview of what we're doing there. All right. See you next time. Thanks.